stocks to watch through the session so far. Early days, 2 minutes into it, we advanced by 0.7% on the S&P 500. What a year. What a decade. Sarah Ponzet breaking it down. Good morning to you, Sarah.
Good morning, John. Absolutely, what a decade it has been. If someone told you back at the end of the financial crisis that we would experience the best decade ever by one measure for stocks, some might have been a little bit skeptical of that. But our colleague Lu Wang had a great story running for Business Week over the weekend. And what she looked at was the risk-adjusted measure of returns, that being the Sharpe ratio. For the past decade, the Sharpe ratio comes to 1.01, as you can see right there. And in data going all the way back to the late 1950s, that is the best risk-adjusted return for equities ever. So you got a nice return, but you really didn't have to sit through all that much volatility either along the way. But also unique to this past decade has really been the amount of negative yielding debt around the globe, as you can see here. And it's really been a recent phenomenon, peaking at over $17 trillion globally back in August. Now we're still close to 12 trillion or so, still an immense amount of negative yielding debt. Also, what about different asset classes? What have the big winners been and what have the largest losers been as well? Well, Bank of America laid this out in a note at the end of last week. As you can see, for equities over the last decade, U.S. equities the best, Greek equities the worst. At the same time, something that really stood out to me, commodities, gold actually the best performer, whereas oil has fallen over the last decade. And for currencies, if you want to look at Bitcoin as a currency, Bitcoin has been the best performer, as you can see there. John.
Sarah Ponzet, always great to get your thoughts on a fantastic note from Bank of America. Reach out to the team to get hold of it. I want to pick up on the equities piece.